Hello everyone. Today we're going to talk about mortgage assumptions, what it is, how it works, and how it could benefit you as a buyer and as a seller. Remember, today's high rates can very well be tomorrow's low rates. So what is a mortgage assumption? It is where a buyer can take over a seller's mortgage and interest rate. Now, why or when would this make sense? If the market's at 9%, the market interest rate is at 9%, and the seller has a 6% interest rate on their mortgage, that buyer can take over that 6% rate and that 6% monthly payment. This is extremely beneficial where interest rates are rising constantly. So which loans are assumable? There are two. The first is the FHA loan, which is the Federal Housing Administration, and the second is a VA loan, which you have to be a veteran in order to get. So this is a very strong selling feature when you're selling your house and your interest rate is less than the going rate that's out there. What are some of the advantages, aside from the lower rate and the lower monthly payment, to assuming a mortgage? So the first is there's no appraisal required. The second is the FHA and the VA have limits on the assumption fees, so your closing costs should be affordable. What are some of the disadvantages of assuming someone's mortgage? The first is you may have to bring a larger down payment. If someone is selling their home and their mortgage balance is $500,000 and you're purchasing that home, say, for example, for $550,000, you will have to bring the $50,000 to the closing plus the settlement fees that are associated with it. So this is something to keep in mind. You should also think about whether an assumption is right for you. What are some of the factors to consider? The first is you have to look at your budget. The second, you have to look at what your available down payment is. The third is your savings after the down payment and after the settlement costs that you have available to you in your bank accounts. And the third is what the current interest rate is that's out there in the market. Does an assumption make sense for you? If the mortgage that you're trying to take over is less than the going rate, then it certainly is something to consider. As always, if you have questions, comments, complaints, or compliments, please leave them in the section below.